This video looks at Chapter 2 examples for Accounting 121. You can find a copy of this spreadsheet in my.Wartburg. So in the first example, we're going to be looking at journal entries for transactions. We have a list of transactions for Spade Company. After we journal transactions, we post them to the T account. And then at the end, we will prepare a trial balance. As we're making journal entries, we need to remember that every journal entry has at least one debit and one credit. Those debits and credits must equal each other. We have a reference number for each journal entry. So journal entry A, Kate Spade owner invested $100,750 cash in the company in exchange for common stock. We have two accounts affected in this transaction. We have common stock and cash. When we're making a journal entry, we place the debit account first. In this case, the debit account is cash because we have increased the amount of cash we have in our company. So we will write cash as the account that gets debited and $100,750 in the amount in the debit column. The credit for this account, we're going to indent on this line, is common stock for this journal entry. The credit in a journal entry is indented from the first line, which is the debit account. Our credit is for $100,750 to common stock. Our debits equal our credits. And we post that to our T account. We debit cash $100,750 and we credit common stock $100,750. Our second transaction B. The company purchased office supplies for $1,250 cash. So our two accounts are office supplies and cash. We increase office supplies, that's our debit, and we decrease cash. So that is our credit. We record office supplies, $1,250, and cash, $1,250. We credit cash for $1,250 and debit office supplies for $1,250. Transaction C. The company purchased $10,050 of office equipment on credit. When we purchase something on credit, we gain an accounts payable. So we have an accounts payable and we purchased office equipment. Office equipment increases on the debit side and accounts payable increases on the credit side. So the first thing we're going to list is our debit of office equipment. Our credit is accounts payable. Debit office equipment and credit accounts payable. Transaction D. The company received $15,500 cash as fees for services provided. When we provide services and receive money for it, that is revenue. We increase cash. cash as our debit account, and when we increase revenues, we credit revenues. So we're going to debit cash for $15,500 and credit fees revenue for $15,500. Debit cash and credit revenue. Transaction E. The company paid $10,050 cash to settle the accounts payable for office equipment purchased in C. We're reducing our liability of accounts payable and we're reducing cash. We're going to credit accounts payable, $10,050, and credit cash, $10,050. Transaction F. The company billed a customer $2,700 as fees for services provided. This time we provided services but didn't get paid for them. Now we have an accounts receivable. We increase accounts receivable on the debit side. Accounts receivable, $2,700, and we record revenue of $2,700. Transaction G. The company paid $1,225 cash for monthly rent. We're going to record a rent expense. We debit expense accounts when we record them, and we reduce cash. $1,225. So we credit cash for $1,225. Debit rent expense, credit cash. Transaction H. The company collected $1,125 cash as partial payment for transaction F. We're receiving cash and we're reducing our accounts receivable. Our customer owes us less money because they paid us in partial amounts. We debit cash $1,125 and credit accounts receivable for $1,125. Last transaction, the company paid a $10,000 cash dividend to its single shareholder. We paid cash out and we record a dividend. So we debit dividend for $10,000 and we credit cash for $10,000. Once we have journaled and posted all of our transactions, we will balance our accounts for that period. So we take our total debits minus our total credits, and we place the balance on the side of the account which has the highest balance. We want that to be the normal balance of the account. So for cash, the normal balance of an asset account is on the debit side. We want there to be more money in our debit side than there is on our credit side. So we're going to add up our debit column and then subtract the sum of our credit column. We have a balance of $94,850 in cash. Go through and do that with all of our columns, debits minus credits for our asset accounts. We also balance the accounts that have 0 in them and write 0 on the normal balance side. So for a liability, the normal balance is on the credit side. For the sake of time, I'm only going to calculate or write out the balances for these accounts that have more than one transaction in them. After we have balanced all of our accounts, we create a trial balance. A trial balance is a document that we use as a check to make sure that all of our accounts are in balance before we prepare the financial statements. For the trial balance, we're going to have the company name. We're going to write that it is our trial balance and the date that we were preparing the trial balance. You'll have on a column with the account name, a column of debits, and a column of credits. In the trial balance, we list all of our accounts in order, starting with assets first, and ending with our equity accounts. Cash, $94,850. Accounts receivable, the balance of $1,575. Office supplies, balance $1,250. Then office equipment, $10,050. Next, we add our liability accounts. And we will record that that has a 0 balance. As we move through the semester, we will add even more accounts. Common stock, $100,750. Dividends of $10,000. Fees revenue, $18,200. And rent expense of $1,225. Then we total the amounts in each column. And make sure that our debits equal our credits. If our debits do not equal our credits, then we've written something in the wrong column. I can already see what I did. I wrote rent expense in the credit column instead of the debit column. That was an easy fix. If we have a mistake here, our debits do not equal our credits, we need to find that. When we are formatting financial statements, we have a total line. You are going to put a $sign in the total line. The other place that you put a $sign is at the first number in each column. As you'll see on the other financial statements we make, there will also be $signs on subtotals. That is example 1.